let's go ahead and get started. So, for those of you on the call now, I would hope everyone knows who I am, but for those of you that may not, I am the president and CEO of Cornerstone. My name is Jonathan Bannister, and I'm happy to say that we've got a very, very special guest here today. Angela Leopard is Cornerstone's fractional CFO. She's made a huge impact and continues to make an impact daily on the success of our company. And because of, I thought it was really neat how her and I met. We met on LinkedIn, and then when I saw her background and then started talking to her, I think our first lunch that we went and had, I learned that she has bought and sold multiple HVAC companies, and her husband is in the business and he owns an HVAC company. And I was like, well, this is crazy because that's the space that I'm in. And now she works with, several of Cornerstone's clients. And I was like, I've got to get this message out. We're seeing time and time again that a lot of our clients, where they think they have a sales problem, or they think they have a lead flow problem, they think they have a culture problem, really, like, it may be one of the issues. It may be one of the problems, but there may be a main problem. And it's like, really what we're seeing time and time again, it really comes down to the financials and not really understanding the numbers and how to properly scale and grow the right way. So with that, I would like to introduce Angela Leopard. Thank you, Angie, for joining us today. You're on mute.
Started off right.
Started off right. There you go.
Well, thank you guys for joining. Thank you for having me. As Jonathan said, my husband is a HVACR contractor. We have owned 3 HVAC companies, both in residential and commercial side. So seen a lot. My background, aside from that, has been in multiple small business areas. I have worked in government, in quasi-government, and large corporation finance as a CFO for, gosh, I'll age myself, close to 20 years now. So a lot of experience, but all the while have owned an HVAC company all but 5 years of that time. So know a lot about that world and how much the numbers can impact your profitability. And then a little bit of stuff we'll go in today is also how numbers and operations talk together. That's often looked at as 2 silos, but they have to come together for you to really impact your profitability. So
love it. So let's see. We have a few more chats. We've got people from Tom, Mountainside Air. Tom, welcome. We've got Kenneth in Nevada. So we've got all over the country here, right? Different markets, different seasonality types of businesses here. So all of this is going to be big topic conversations today, because at the end of the day, if you do not know your numbers, and you're never going to be in a position to grow. And if you do grow, it's not going to be smart growth, and it probably is not going to be profitable growth, because you're going at it blindly. And I just got off of a podcast a little while ago with Dan Antonelli, and a lot of people in the industry know who Dan is. He's a genius when it comes to branding and creating these meaningful brands that tell stories that everybody knows and remembers. But just like that, where a solid brand and a household name that everybody knows is going to help your overall marketing, and you're going to drive your marketing costs down, and your conversions are going to go up. Like, that's great. And it is amazing. But it all starts with, if you don't have your numbers in place, you still don't know when to hire, when to fire, when to buy the next truck. How many techs do I really need to be doing this? What should I be paying my techs? And all of that just makes a huge difference. So I hope, that all of you get something amazing from this, and you take something away today that you can implement in your business, starting today or tomorrow. But feel free, there's going to be polling questions that we're going to put in here. So we ask all of you to please engage and respond to the polling questions. But if you have questions throughout this, feel free to ask them. Just click the little Q&A button down at the bottom, and you'll be able to submit your questions. So with that, Angie, do you have your PowerPoint or whatever that you can throw up there? Here we go. Floor is yours.
Everybody see it?
We do.
All right. Well, speaking of polling questions, we're going to jump right off with the first question. Just because it's, to me, in the HVAC space, it's one of the most important questions that I ask everyone. It's one of the first questions that I go into a company when I'm looking at assessing an HVAC company. And it's interesting, the numbers that I hear are all over the place when they assume what this number should be. So let's jump right in to the first question.
Yes. So the first question is, it should be available. You may have to hit the polls icon down at the bottom. But the first question, what should your technician efficiency rate be? So, please select, there's 4 options there, but please select which do you feel that number should be. And Angie, kind of talk through, you say that this number is all over the place, and it's obviously very concerning for you, but why do you feel it's so all over the map? Like, not, besides the obvious that they just don't know what they don't know. They may have heard, and they would know what that number is supposed to possibly be, right? But why are they struggling so hard to get there? Or like, do they think that the number is so out of reach from where they are? They go, well, that had to be this one, crazy story or success story that's never going to be me and my business.
I think that, and the next slide will go into a little bit of this, but I think one of the number one reasons is because there's a misconception on how to track that number. And there's systems, we all use them in the HVAC world. I remember owning a company when we were literally still on pen and paper invoices, that time frame, all the way to, Service Titan, Service Fusion. There's a lot of the others out there, but how you set that up and how that data is tracked is really what tells you the story of your company. What I continue to see over and over again is that isn't set up correctly. And so when people feel like their tech efficiency is kind of average or staying along the same lines, they just assume that's best practice, that it's just good. I've talked to some people that have shocked me when they thought that was, tech efficiency. Theirs was very low, but they thought that it was right on the mark because of low, like shoulder seasons. They think of, well, we don't have enough work for all of our tech, so that drives tech efficiency. And there are a lot of those factors that come into play, but that's why it's so important to know your numbers, know what you're shooting for, and then to manage to those numbers. So often we look at data these days and, we're flooded with it. Every system we turn on, we can look at different types of data, but where it really comes into mattering for your business is how do you manage to that data? Because we can all throw numbers up all day, but if we don't use it to change and scale our company, then it does us no good to have reach of it.
Well, so we have everyone responded with D, 70%. So obviously that's not the right answer. So here we go. Like, let's talk about why people may think it's 70, and because obviously 85 probably seems crazy. And I know you are working with one of our clients now in California, and his, tech efficiency numbers was nowhere in this ballpark, right? So how, and this is possible because obviously, your husband and his business runs at this number. So how did they get there, and where did this number come from?
So this is a best practice number. It's reported. I've went to many large seminars. My husband has as well, in both owning and in operating large HVAC companies. One thing I'll say is 70 doesn't surprise me. I'm actually happy to hear that, because 70% can be a mix of things, right? So my husband, he will constantly remind me, because I'm the one behind the numbers, saying that we got to get 85. when you're looking at your techs, look at your experience levels, look at how many calls you're having. There's a lot of factors that go into that. And that's why it's so important to know your numbers and know how to manage to them. But you want to always target best practice, right? So even if you're currently operating at 60 to 70%, honestly, you're doing great compared to the market, but there is a way to get to 85. And when you do have a really solid, efficient team, you'll see your revenue continue to increase. You'll get your ratios in line. And there's a lot of ways and a lot of factors that do go into that. Like I said, if we have a tech that is like a tier 2 tech in our business, tier 2 would be not as experienced as like a tier 5, which is more in the contractor level or like a operations manager level. They may operate at 65, 70, and with training, we're trying to get them better. You don't want those techs to speed through work because they don't understand enough about it to actually, then your callback numbers go up, which is just as bad to your tech efficiency. But what you do want to do is you want to monitor that number, because if you're looking at it for each individual tech, that allows you to put other operational components in place, training, staff development around these. If you are monitoring your scorecards correctly, as a company, you want to know what your average tech efficiency is. We track each individual tech based on their efficiency. And the reason we do that is because then when we're doing one-on-ones, we can actually put training in place. We can go back and look at what are the calls that they're really struggling with? What are the things that are happening? And data most often will tell you when you need to dive in. It's not going to tell you everything. Like, we can't look at a tech and say they're 70% efficient, and so we just need to like fire them tomorrow, or they automatically need more training on residential units. That may not be the case. We have to use those data points to know when it's time to dig in and really assess more. So that may be the time that you're going to look at your tickets and your other data that you have and manage to it. But overall, and I'll jump into the next piece. When you look at an HVAC company, most companies always think about what are our number one revenue producers, and it's sales. I do not believe that in HVAC. I 100% believe that your technicians are your number one revenue producers. You can sell all day, but the technicians are the ones doing services and installs. They're the ones that are your entire HVAC business is built around. So when you look at their efficiency ratings going down, it is a direct impact to your money. There are other things that affect your profitability, but your number one place to look and try to get more net from is going to be your tech efficiencies, how you're using them. There is, one of the things that goes kind of off of the finance side into more of an operational side, and this is what I'm working with one of Jonathan's clients on now, is also how do you have your tech set up? Are you cross training them? If you get an influx of calls that are installs, can some of your service guys go over and help? And if not, are you bottlenecking for your company? And so your revenue is directly impacted by that. And vice versa. If you have, Jonathan has shared his spreadsheet many times, and let's say you average 1 in 9 calls as an install. Well, when you get 18 calls that are serviced, are your install techs able to go over, and does your business model allow for you to easily transition them over? And, is your dispatch able to do that? How are you really setting up your technicians? Because those are your number one revenue producers. You need to make sure that all of your policies and your programs are in place to make sure you're utilizing them to the max. How do you measure their efficiency? Obviously, with every system, we can get down to a lot of different details, but it really comes down to these 2 simple things, right? It's hours billed versus hours worked. For us, we track shop time, we track drive time, and we track build time. And then obviously callback. Your callback rates are going to directly impact your tech. if we have a tech that's, constantly getting callbacks, his efficiency rating is going down significantly. So that's again where you want to really monitor that. That's when we're jumping in. We're trying to do staff development. We're determining, is this a performance issue? Is it a training issue? Is it not the right person in the right seat issue? But whatever that is, this is one of these places where managing your team directly impacts your revenue, especially for technicians.
Hey, let me ask you there, Angie. Have you seen where? So you said you track shop time, drive time, job time,
build time.
Build time. So is there other companies you've seen that they're tracking something else that maybe would throw these numbers off, or they're not tracking enough information, or they only track the build time only? What can fluctuate these measurements?
Well, one of the most common things that I've seen is that systems are in place to track, but they're not being utilized. Okay. One of the clients I have right now, we went to try to dig out those tech efficiency numbers. And what we found were there was inconsistency with how techs were trained on clocking in and clocking out. So that's one impact, making sure that your policies and procedures can be just as important as, again, your management to your numbers, because that is your guide. That's how you tell your company to operate, and that directly impacts spending and revenue. So that's one of the most common things I've seen, is just inconsistency in training. And then there's no accountability. Tech accountability is huge, right? If they're trained correctly and they're, at a job and they're logging in, and they know that they need to go on their phone or their iPad and they need to check in that they have arrived at the job, they're on site, they check out when they've actually left. That's very important. I've often seen that get really lackadaisical, and then it's hard to look at the data, because you have some techs that, clock in on job site when they leave their house in the morning, but that's drive time. That's not, and that's a different number, because, most all HVAC companies, hopefully everybody has a truck fee or a trip charge, something along those lines. And that is a good way for you to be able to monitor your margins there as well. All of those data points let us know, are we charging enough? On average, are we spending more money in gas and trip time than we are making? All of these pieces matter as far as how techs are recording their time.
Okay. And guys, feel free, if you have questions. I mean, obviously the only stupid questions are those that we do not ask. So, I mean, if you have questions as she's talking, whether you're $1 million company or you're a $50 million company, and we've got a big mixture on here today. So just ask the questions and let's make sure that we get them answered. We want everyone to leave this call with some kind of move forward, take action, when they leave here. So, I mean, I can't tell you how crucial these numbers are. One of Cornerstone's current clients, I mean, they're at they're an $8 million company. They do a lot of things great. And we've got some efficiency numbers that we saw in the 30-40%, Angie, and it's, I mean, and what will that do for an 8 or 10, $12 million company running, they're supposed to be, 80+%, and they're running at 40%. Like, what, give everyone an idea of what that does to the business.
Well, I mean, if you just think about it's a direct impact to your net income, because your expenses, you're taking in 45% less money than you should be, is really what it boils down to, because you're spending money for a tech, a revenue producer, And he is only he's only working 40% of the time essentially as a revenue producer, which means that you can almost assume that your overhead is even higher, because a lot of that time is being booked directly to admin or overhead in the grand scheme of things. Whereas if you went up, if you had a tech that was billing at 40%, all of a sudden you're billing at 85% of their time. Imagine what that's a little over double what you would, versus, one of the other things I see people do all the time, and we'll get into it more, is tech efficiency is low, but people throw heads at it. And when I say throw heads at it, I mean people hire. So, you see that, well, we have more calls coming in than we have techs to do. But if your tech efficiency is 40% and it should be 85, you could have 40% techs for one. So you've now just created more expense for yourself, and you're still bogged down on the revenue side. So it causes a constant issue. And that's why it's so important to really review that. It's no different than, if you're a sales company, right? That your primary revenue generators are sales positions, and no, you wouldn't keep them if you're paying them $100,000 a year and they're only bringing in 50. I mean, you wouldn't keep them for that, right? So it's the same thing. It's looking at efficiencies. These are your revenue producers, so they have to generate the revenue, and that's the reality of the HVAC world.
And what's scary is that, like, I've had some clients in the past that I don't think they knew how to really track the efficiency numbers of their technicians. But what we did know is that we had a scary situation on our hands, was that their techs wouldn't sell anything. They wouldn't talk about anything. So they went out there and all they did was they had blinders on and they fixed stuff. And then they are going to fix it at the lowest cost they possibly could, get it operational again. They're not going to talk about maintenance agreements. They're going to talk about IAQ. They're not going to talk about possibly, the system's 12 years old. They're not even going to talk about replacement, because they're just going to go and fix it. And, and it used to just stress me out, because it's like this guy's not producing any money for you. Like, how do you justify keeping payroll? It's like, well, we have calls come in and he goes and fixes stuff. And it's like, yeah, but it doesn't work that way.
Yeah.
Like, he's costing you money. And I think what you just said there about the sales position, it's so easy to track the sales position, because it's like, well, I need the salesperson to produce X. And if they don't, I'll get rid of them. But like, they don't look at the technician as the same role.
Yeah, because I think when we're all in the service industry, so it's, it is kind of that old school thought of, well, they're out there, they're clocking time, but they are your revenue producers. And if you don't look at them that way, then, the company will never scale, or worst case scenario, it will slowly fade away. And that's the problem. Some other ways that we look at staff efficiency, and I won't go into a lot of detail on this, but it is, this is one of the common questions I have is, with staff efficiency, how can I look at some of my overhead positions and look at like whether they're efficient or not? There's a lot of different ways. The scorecard, I'll reference that a couple times in this call. Big fan of Entrepreneur Operating System, EOS, and the scorecard. If you don't like it, you haven't tried it, I would really encourage you to try it. But if not, keep track of all of these things, right? And when you do that, if you operate in a system like that, you're going to go into these meetings, and every staff member is going to have some kind of rating, that performance indicator that they're going to have to look at. So for us, for call centers, for dispatch, however you want to look at it, we track call volume, track call conversion rates. There are a couple of things that we look at that dig a little bit deeper in, would be, how are they dispatching? So we may go in and monitor time between calls when it comes to each tech. So one of the biggest drains, we want tech efficiency, but the next biggest drain is when your dispatch team is not planning accordingly, right? So like we have a 1 through 5 measurable. So each call that comes in, 5 is a red flag, like get it on the books right now, dispatch immediately. So setting up some protocols like that can help your dispatch and your CSM be able to really dispatch and use your techs more appropriately, so that one tech isn't in a car for 3 hours out of the day. Monitoring, making sure your systems are set up and the training is there so that your techs, your dispatch is able to look at who's the closest person. And this is also where that cross training comes in really, really important, because I've often seen HVAC companies say, well, yeah, that guy was close and he was almost 15 minutes left on a call, but he didn't really know walk-in coolers that well. And so, I had to send somebody from an hour and a half away to go up to this call. Well, that's when it is really important to see everybody's going to have their specialty in the HVAC world. Like I said, my husband does hot side, cold side, residential, and commercial. I know all of our techs have different skill sets, but we try to make sure that our development and our training is around at least getting some of the basics for all parts of the company, so that if we do have to use one of those techs, it's just a lot more efficient on the company. Some of the other things, call conversion rates, sales, just like we spoke about, obviously you're going to want, if you're paying a salesperson and they are not generating sales, you're going to look at sales numbers versus what you're paying. And there are a lot of people, Jonathan can speak to this, a lot of people that assume that sales, if they're coming in, that it means they're efficient. You got to really run the numbers, look at what it's costing you for that sales position. And I know a lot of HVAC companies that have independent sales divisions, aside from, some of the training is put on the techs for upselling inside the house. So always looking at that. And then one of the big ones for HR or admin is retention. So your management levels, your HR is, what is staff retention? That's a culture thing. And being able to monitor that also can impact you. And all of these things seem very operational, but they do impact your numbers. I can't stress to you how much every time you turn over a staff member, how much it costs you to retrain another staff member. If your sales division is partially operating, but you could maximize it, that's your revenue. That's how you grow. So all of these things matter. Call volume. Another, not to get off on a side note, but one of my pet peeves in the HVAC world is that oftentimes we expect technicians who, again, are, what our companies are built on. We expect technicians in the shoulder season to only work as we have work. But typically dispatch and CSMs or overhead positions are still guaranteed their 40 hours. And so what does that look like? What is our call volumes? Do we need that many dispatchers? Monitoring those things. What is an average call in time? And then what does that correlate to in call volume? How many heads do we actually need for the number of calls we have coming in? And if we don't have that many calls coming in, is there something that we can do to generate more? Can we do lead generation? There's other things that we can do for those positions.
And I would just challenge all of you, here today, like what Angie was talking about with the scorecards. Like if you do not have some kind of scorecard or some version of a tracking system where there's measurables, there are certain goals and measurements that somebody has to hit, and you're ranking against that. Did they hit it or did they not hit it? Are they on track or are they off track? Obviously, she's a huge fan of EOS, and she helped us implement EOS into our company last year, and it's been a game changer. And I'll tell you that it will help you see, EOS is about right bodies, right seats. Like, do you have the right people on your team? So here she is talking about the dispatchers or your call answering service, whatever, whichever you have. But if you're not like tracking that and saying, okay, if X amount of calls come in, we should be converting at this. And if we're missing on that number, do we have a training problem? Do we have is the quality of the leads coming in, not good? Where are we missing the mark? But if you don't have some kind of pulse to be able to say, we should at least kind of be here, we can always get better, but at least where we should be. And if we've dropped off and we we're getting, in the other direction of where we don't want to be. But somebody has to be responsible for that. And somebody has to be looking at all these different numbers. And, and I just wonder, is this something that all of you are really looking at to make sure, do I have the right people answering the calls? Do I have the right people going to the service calls? Because if it's, I know a lot of companies, we have different models. We've got techs, we have sales, comfort consultants, and we've got a selling tech model. But do we have the right person for whatever model it is that you have? And the only way you're going to know that is going to be based off of numbers, metrics, and you have to have that data, and you have to be reporting it and tracking it and making the decision. And I'm going to tell you, like this, you may have the calls coming in, but like I asked Angie the question about what does it mean to a business if they're at 40% efficiency instead of 80? And it's like, well, it's a whole lot of money that's not going into your pocket, because you're basically you're having two technicians doing the job of what one could do. I mean, you've got to let that really sink in. But if you're not tracking these numbers, how do you know? You just think, well, everybody loves, Billy. Billy's great. Billy fixes stuff, and Billy gets 5-star reviews, but Billy's running at a 35% efficiency rate. Like, Billy's costing you a lot of money. Like, Billy needs to be, like, in retirement, I don't know, but so I just challenge you, if you don't have some type of report card, please start immediately. And if you're interested in EOS, obviously the book behind me there, Traction, there's a book called What the Heck is EOS? Those are two good starting points for you to really be able to get a hold of your business and know where it's at, where it's going. Do I have the right people in place? And how are we all going to work in the same direction to get there?
Yeah. And one of the things, just to plug in on the scorecard, a lot of times I get asked, well, okay, so we put, let's just use call volume as an example. We put call volume on there. What does it mean? Well, the reason that EOS is so important, or any structure that you're looking at, as long as you're monitoring your numbers, is that you go into a planning session and you say, what does my revenue have to be? Every planning session should start with, what's my revenue, right? Like, how do I hit this number? And you back into it through these numbers. So you would actually plan out, okay, if I need this revenue and this is my burn rate, what do I have to do to get the additional revenue I need to grow to that? And then you back into the numbers. I need this many leads. I need, this many calls have to convert to this. What is our average ticket? There's all of these numbers come into play. They directly impact your revenue at the end of the time. And the reason this is so important to monitor regularly is because when you get off track, you can quickly know that you're off track and pivot or change things, so that you don't wait till the end of the quarter and say, oh, well, we didn't hit our revenue this month. And then you've wasted all that time and you still didn't hit your revenue. We look at it every week for EOS. So every week you're looking at those numbers, you're determining if it's off track. Do we know why? If it isn't, or if it is and we don't know why, how do we do something? What do we do? And dive into the numbers to see what happened. And sometimes it's things we can fix and sometimes it's not. But what it allows us to do is quickly make another plan so that we still protect our business and our revenue.
I like it.
Speaking of, all right, this is poll question number 2.
Yeah, so we were kind of split here. So we had some trues and some falses. I think, I wasn't the smartest student in school. Angie's got a couple of master's degrees. Like, she's a school nerd. But I always, a question like this, I got to go false, every time. So what's the answer?
It's false.
Yeah. All right.
Obviously you have to have revenue, you have to have revenue, obviously, but one of the other most important places that I have watched, people add revenue. If you add $1 million in revenue and you add 1.2 million in expenses, well, it did you no good. So revenue is not the only way to impact profitability. Expense management is huge and one of the most missed things in small businesses, large businesses too. I've worked for a $158 million corporation and we cut just on office supplies, $32,000 a month. It was crazy what they were spending. And And that was a direct impact to our net income, right? Because we saved that. I mean, if you bring it in and you expense it right back out, it does nothing for you. Oh, and then so we're going to go into question 3, and that's because both of these lead into my next section. So what is the largest mismanaged expense in most companies?
Yeah, so everybody, it was 100% there. So everybody picked staff expenses. So
Okay.
apparently they know this because they see the P&L and they see what is overwhelming there. So
yeah,
let's talk about, if everybody knows it's staff, how, this, obviously the efficiency numbers should be super important, but it can't just be for technicians, is kind of what you're saying. Like, everybody needs to be working at the most efficient level they possibly can. Otherwise, it's costing the business money in some form or fashion.
So staff expense, again, I can't stress enough, in every industry, in every sector that I've been in, the number one thing that people do is throw people at a problem. And it is not how you fix the problem. The other thing that I see often happens is people look at people and not positions. I never want to fire someone. You never want to do that, right? Nobody wants to go in and just start cutting heads. But at the end of the day, I have been in a lot of companies. I've had to fire my sister before. So, but it's understood, like it's the position, not the person. And that's really hard, but it's one of the biggest drains on companies that I've seen. And the reason is, you look at a position or you look at your staff and you say, Julie's just not really cutting it. She's just not able to do it, but we really like her and she's really sweet. And she greets the front door really good. So let's create a position for her. Well, did the company really need it? No. But people, they create positions or they subset things. So, oh, well, she was good at this, but let's say that you hire a bookkeeper, right? And it's bookkeeping and payroll. And well, she's really good at bookkeeping, but she's horrible. She's messed us up. She's not in compliance with payroll. Well, we'll just create a whole nother position for payroll when that's really a one-person job. And so then you've now added an entire salary for somebody because you don't want to face the fact that that it's just not the right person in the right seat. And that is huge in all corporations, but a lot of smaller companies, and smaller being under the 50 million mark, right, that's the number one plaguing issue is hiring, firing, making sure people are in the right seat, and then monitoring that, performance reviews. Again, HR is the one thing everybody runs from, I feel like, but it's the highest impact to finance as far as the P&L goes. And that's why you often see HR and finance together. Although it's mostly because of compliance, it's also because those are our largest expenses. And, if you have a tech running at 35%, and all of a sudden you get bombarded with calls and you add 2 additional techs when really you should only add 1.5, then you've now tripled your staff expense. That's not including salaries. You got to think you've got SUTA and FUTA and FICA, and you've got, benefits that you offer. Paid time off matters. All of those things directly impact your financials.
Yeah, I think that's something that everybody really needs to think about. I think the one thing that comes to mind for me is, I've heard this over the years from my clients go, yeah, Billy he's not good with selling add-on equipment and stuff. And then, we try to do some training with them and we push them a little harder and like, yeah, I think he's just not good at this and he's not good at that. And they're like, I think we're just going to move him to the install crew. And then it's like, well, wait, if he wasn't efficient at his job as a technician, so they'll go, he's a tech, then they move him to maintenance, then they move him to an install crew. And it's like, why keep moving this person around? Why not get the right person that's going to take your business to that next level. And I think a lot of people, if you can focus on what Angie was saying, and it's not easy because obviously, we're humans and we want to care and have compassion about everyone that, is within our organization. But you have to think of the bigger picture, right? Like y'all are all trying to provide for, your families, your team members' families. There's a lot of mouths that you're trying to feed. It's not about being greedy. Like I think you're being greedy if you keep these people on your team and then you potentially put yourself out of business, or you're strapped for cash and you can't go get a new truck or a new van or this new piece of equipment or this new technology that's out there because you're cash strapped, because your payroll is overinflated, and like she was saying, like the insurance and the benefits and things, like all those little things add up where we think we're just, oh, well, we'll just add this extra person. It's not a big deal. It's just one extra salary. They can actually help do some other things. And it's like, focus on the position and not the person. And the position, you have to focus on the efficiency of that position. And that's where the scorecard comes in. And you got to say, here's the position, and this is what we need to get out of this position. Not out of this person, but this position needs to produce X for us. And X may not always be revenue, but X has to do something to push the needle forward to take your business to that next level.
Yeah. One, I was a little early to jump into how it impacts, but so I'll jump over one. We've already kind of went through that. Expense management. I touched on it a little bit. If you really just take it down to your revenue minus your expense equals your net, like that's a simple way of looking at it, your net income. So obviously, if you have less to minus out in expense management, then your net income is bigger. I've watched, I've onboarded with clients that, like I said, they want to increase their revenue by $1 million, but then their planning is lacking. And by the time, I go in and I look and I say, well, in order to do that, you're going to spend 1.2. So that really didn't make sense. You really need to do a performa. You need to know what you're doing, what service are you providing, what is the cost, what are you going to generate off of this? Because if you are not really controlling your expenses, it does not matter how much revenue you bring in, your net will still be the same. I have one client that took that very seriously. We really scrubbed, and that was a good example of someone that took it seriously. His revenue went up 75% and his net income went up 77%. Because we were able to cut so much out of his expenses, but still very efficient. We just took a lot of time to really review and look at how he was generating money and what were systems in place. And that's another thing. That is probably one of the biggest things I would hope everybody takes away from this webinar is, besides your numbers, is finance is not accounting and bookkeeping only. The CFO's roles are to look forward after the accounting and the bookkeepers have done the transactional work. The CFO's roles are to look forward and plan and get you to where you need to be and work with operations in order to do that. It's not a siloed position. And I've watched it happen over the 20 years I've been in finance. Like, I've watched it be a silo, and everybody just thinks of finance and accounting as these people in the back that are writing checks. And that is not the case. They need to help drive your operations just as much as operations does. And expense management is a huge place. If you are not talking to your finance team about plans, about new products, about new offerings, what's coming down the pipe, if you're not planning, they cannot help you with expense management. They can't help to get you more efficient in that way. Budgets are huge. I don't see it a lot in small businesses. Planning, if you're not going to do a budget, do at least some baseline planning through an EOS type system so that you at least know if you are going to generate X, what is it going to cost you to do that? Why you must understand and be able to interpret your profit and loss. This is probably the number one issues that I see all the time. So as a CFO, I will ask managers, operations, owners, Well, do you have a profit and loss? Who manages the profit and loss? Yeah, I know what it is, and I look at it, but they don't really understand what it's telling them, or they don't understand how to take a profit and loss and make management decisions based on that. And that is really important. One of the biggest, expense manager is a good example. When you're looking at your P&L and you see that all of a sudden, month over month, one expense line has really jumped up, you got to start asking yourself a question. Is that normal? Did we know that was going to happen? Is there an operational reason for that? These are all things that you should be looking at all the time, instead of just, quite often I see, oh, revenue's there, oh, expenses are there, and then they kind of file the P&L and they don't look any more into it. Again, a good accountant, a good CFO, they will be able to help guide those conversations and actually interpret some of that for you, and have a conversation with the CEOs or the executive team about that. But what I see so often is that most small companies have maybe a bookkeeper, and their idea of an accountant to kind of close the month is not there. They think of a CPA at the end of the year to file their taxes. And so there's not someone that's actually there doing interpretive finance for them and helping them to manage to their profit and loss.
Know this, and I just want to make sure that everyone understands. Kind of give your interpretation of what an accountant does, what a CPA does, and then obviously what a CFO does, thinking in terms of the home service space. And because I actually know that 99% of the home service companies, they don't have an in-house CFO that's with them full time. Like, it's just nothing that their bottom line could usually afford. So what is the major difference in the two?
So when you think of a CPA, and I have a lot of CPA friends, I don't ever want to step on their toes, but for the most part, they are taxes. So you think of like, when I say taxes, it's, some will do tax planning, but I don't necessarily always think of them as strategic. They are there at that one point of the year. They're going to do your taxes. They're going to file certain things for you, and that's kind of what their role is. An accountant, let's go back, a bookkeeper, I think a very day-to-day transactional. So they're entering basic things into, let's say, a QuickBooks. They're not necessarily trained on journal entries or how to really close a month, or if there's major issues with the balance sheet items or things like that. They're not really understanding how to manage that, or they're not trained to. And then an accountant is kind of that next tier up. When we talk about accountant in-house, like a staff accountant or senior accountant, they are the ones that are going to close the month. They're going to know that next tier, but still really focusing on the past. What has happened this month, what took place. Some will do a little bit of planning with the CFO, but then you move up to like the higher end of the controller, director of finance, CFO level. And that is really where you're supposed to have somebody that's looking at, we want to offer a new service. We need to do a market study. We want to plan and project out what's going to happen over the year, and how do we hit those numbers. And, we need help with KPIs, those kind of things. That's what a CFO does. To give HVAC related examples, obviously we own a company in the HVAC space. I run L10s. We look at all of the measurables that I've talked about today. I'm helping work with the operations team to make sure those are in place. With one of Cornerstone's clients, just did an in-house. I flew out to his office. We reviewed his org chart. We reviewed his efficiencies. We reviewed where he was missing pieces. I do a monthly engagement with him. He has a bookkeeper in-house, but we tidy things up. We create a dashboard. We actually help him interpret his numbers. We stay on top of and help him monitor a lot of these numbers. And I work with Service Titan to draw out some data and make sure he knows what his numbers are telling him.
Thank you.
And this is a good, these are kind of whited out because this was a client. So just want to give a quick example. all of my dashboards look a little different. This particular client, this is his logo color, so I hate that it's really dark. But this is a good example of something that we put together, right? It's a quick way for this person to have a snapshot of what's happening in the month. So this is a P&L that this is your P&L and your balance sheet all put into a dashboard report, and it makes it easy. A lot of my owners, they are, visionaries. They're trying to run a company. They aren't finance people, but they need to know enough. So we're able to put this together, and then we do a call and we review the dashboard. We look at where my concerns are, what's happening. So if you don't have someone in-house that is doing this currently, you really should probably start looking at that. This is a financial dashboard. There's another dashboard I did not include, but that's where we look at all of the KPIs that we've talked about. That's tech efficiencies. That's average ticket costs. That's installs versus service tickets. That's tech revenue. So looking at each technician, what have they upsold? What is their revenue producing? Truck fees. What is our cost for trucks right now? That's huge. I mean, look at gas right now. If you're not staying on top of your expenses related to your truck and your gas, then you are losing money probably. We just changed. My husband and I just had to do that. We had to up it because of gas. I mean, those are all things that if you're not really looking at on a regular basis and having a dashboard that's showing that, then you're not going to know that you're actually losing money. You should be monitoring it enough to look at margins at each section of your HVAC company.
Question time. All right. So do you know your current average tickets? And yeah, unfortunately, there were a couple people that said no, a lot that said yes. And I know this to be true because obviously when we start the whole marketing and planning, we like to take the consultative approach and really want to understand your numbers. And for us, and I think it's going to be a little different than what Angie's going to speak on. For us, it's this simple. I've got a client in California, his average install is 19,000. I've got a client in Miami, their average installs 6,000 or under. If both of them told me I'm a $2 million company and I want to go to 3 million or 4 million, and I will tell you that the average business owner that we're dealing with, that's the level of what they know things. We're at X, we want to get to Y. That's it. Like they're not looking at it at any deeper numbers. It's just revenue. It's just revenue. And like Andrew was saying earlier, you pick up an extra $1 million in revenue and you've got $1.2 million in expenses. Like you didn't make any money. Like it probably cost you, it obviously we know as we grow the business and we have more employees and everything else, it just adds more stress to the business. So great that you can, brag and say like, I'm at this amount of revenue, but if you're not taking more of that home with you, like it doesn't do any good. And so for us, it's like, we need to know those average ticket numbers because like Angie was saying on our spreadsheet, if we're looking at the month of July and we feel that, based off of historical data and the best information that we may be able to pull from some of our clients, if we want to look at, okay, they're in Baton Rouge, Louisiana, and it's July, we know it is steamy and it is extremely hot. So we're going to be converting typically in those months, 1 out of every 8, 9, or 10 service calls into a new system. That number can fluctuate depending on, the age of the system and when's the last time you've been at that person's home, right? But still, you're going to have a much better, success of closing them on a new system in July in Baton Rouge than you are in November, right? So understanding what are those numbers, what are those conversion numbers, and what are like I've got a client right now that just submitted in the other day, like their average service ticket is $200. And it's like that, that's going to kill their overall business. They're just basically shooting for all installs at this point. Is all and your business can't be ran that way. Like service is going to be a very important fact. It's not going to be the biggest revenue generator if you're just looking at the numbers, right? Because obviously the installs cost more, but you got to look at where did those installs come from? And I will tell you that the large percentage of the installs are coming from service and they're being flipped over into installs. Because not a lot of people wake up one day and go, you know what, honey, I think we need to get a new system. Like our system's working fine, but let's just go ahead and drop, $15,000. Like it doesn't work that way. People wake up and they're in Baton Rouge and they're like, holy hell, it feels like a swamp inside my home. I need to get someone out here. And then they get out there and you go, hey, your system's 8 or 10 years old. Like we could probably patch this up for you, but really you're looking at $1,300 today and probably don't know what tomorrow looks like. Like you probably have, let me give you some options on replacing your system. Like that's the way it works. But if we're focusing on service call leads for our clients and flipping those into new systems. But if you have a $200 average ticket on service, like you are losing your ass every single time your guy gets in the truck, but you don't know how much you're losing unless you have really control of these numbers. So it's important.
Yeah. And also, I put this one up here because I was just curious how many people know it. I am shocked how many people actually don't know what that number is. But then, I'll just go over, while we're looking at it, some of the other things that are really important that this is your business. When you're in HVAC, it is imperative that some of these numbers. Technician callback rate, that again directly impacts your efficiency. Your call volume, technician call volume is huge. When my husband and I plan, we look at when do we need to hire? Well, okay, how many calls on average do we have? What is the average call time? And then what does that generate to each day? So how many techs do we need? So, it's not always going to be the same. We all know that there could be a call that's an hour and one could be 8 hours. This is all looking at ratios. That's the best way you can plan. But on average, we can tell, like for us, an average call is 2.5 hours. So, again, not installs, as a service. But, when we're looking at that, we're going to know, okay, well, then a tech can do X number. You have to build in some drive time in there. But we're able to pretty much know if our average ticket cost is this, and this is about how many jobs they can do in a day, then this is how much revenue is generated per tech each day on average. And then what is our cost? What is the cost to run that truck and run that technician for that day? And we can get some quick, again, ratio margins. Obviously, one of the number one pushbacks I get is it can be all over the place. You're looking at averages because that's how you have to plan. But that's how you can plan. Okay, if we start seeing a massive call volume increase, and we know that one tech can do on average this in this department, when do we need to put an Indeed resume or an Indeed posting out, right? When do we need to start hiring for that next person? Because the other biggest issue you have is too many leads and not enough techs to do it. So that can directly impact, but it's good to hear that a lot of people know your current average ticket rate. You should have a totally separate rate. You should know what your average install is as well. And then, just to take a little bit deeper dive, I don't know how many of you are doing both residential and commercial. But, for us, we have a company average, but we also, we have split up and we kind of planned split up between residential and commercial because those are two very different types of ticket size. So our residential ticket average is much lower than our average commercial ticket. So that's one thing that you want to monitor if you're doing both.
Yeah, and the one thing I'll say here, guys, is in the worst thing you could do is, and you're here for a reason to learn, but the worst thing we could do is, let pride get in the way of us. Like, if you don't know the numbers, you don't know your numbers. And look, it's like we learn how to get there. We reach out to someone for help. And that's the reason why I wanted Angie to be able to offer some of the knowledge that she has here. Because if you don't know how much you should be spending on marketing based off of what you actually need to grow to keep your business growing or to keep the doors open, or you don't know if it's time to hire a new person, or if you can afford to hire a new person, if it's time to go get a new truck, if I can afford a new truck, if I should be buying equipment in bulk, from the manufacturer, can I afford to buy equipment? But the unknowns is what is scary about being a business owner. And I will tell you, like, it is extremely uncomfortable to wake up, or you've got some sleepless nights where you don't know how, if I can make that decision, or if it's the right decision, or do I stick it on the credit card, or do I, go get a line of credit, and it's like, why am I having cash flow issues? But these are the things that your bookkeepers and your accountants and your CPAs just do not do for you. And they will never do. Like I thought I had a great CPA for a long time. And I kept saying, like, how do you help me forecast? Like, how do you help me figure out like how I'm going to get X amount of money into the bank account? And how do I get to this certain, cash flow position that I want to be at? And how do I know when it's time to hire these other people? And they're like, yeah, that's not what we do, right? Like we take the data, your tax filings, and like we tell you how much you owe or you're going to pay at the end of the year, because they're looking at things once the money's come in. And that's not the way that we should run our business. Like everything has to be planned out. There has to be a roadmap to the success. And there's a lot of unknowns, but I'll tell you, it's a whole lot less scarier when you've got somebody that's telling you, all right, here's where your people are doing great, and here's where your people are failing. And this is what in order to get us to this next level, whether it's cash flow, whether it's revenue growth, if it's margins, whatever it is you're looking at, to have someone say, well, in order to get there, we need these two people to be able to, get their efficiency numbers up. Or it may be, all right, really it's time to hire another person. But in order to do that, we got to get X amount of more phone calls in, right? So it won't be as scary for you to hire that next person that you probably need to hire if you knew what needs to happen in order to be able to bring that person on. But then it's like, well, do I bring that person on? What if the leads don't come in? Well, like what do I even have the money to be able to afford to get more leads coming in the door? Those unknowns can be scary. So like those of you that are on this call, like I'm telling you, like pick Angie's brain after this. I'll give you her contact information. She works with some of our clients now. If you want to reach out to her for help, because I'm telling you and I'm speaking from experience. Like I know what that feels like. Not knowing how to get to that next place is an extreme, it's an extremely scary position to be in. But there are people out there that can help you look at your current numbers where you are today and help you forecast where you want to be, and tell you it's not always about like you got to spend more money. There's a lot of stuff you can do in your own house right now to clean up those numbers, to make more money, to put more money in your pocket. And it's not just more money in your pocket to go necessarily like buy a new Lamborghini. Like if in order to grow a business, they say like it takes money, to grow a business. Well, it does, right? So you may be able to cut some places to be able to get more efficient in some places, to put more money into the business, to be able to expand into a place that has a bigger warehouse, or to be able to go buy more trucks and equipment, right? So if you don't know it, please like reach out and ask for help. Like do not let pride get in your way here, because there's so many contractors I know that go out of business every single year, and they're at millions and millions of dollars in revenue, but they're not running their business the right way, and their margins suck. They're doing a lot of residential new construction. They're doing a lot of home warranty work, and the margins are awful. The lead quality is awful. The callbacks are awful. Reach out to somebody to help guide you. How do I get out of this position I'm in? Because I don't want to be here forever. So, all right, go ahead.
All right. So next question. Do you have regular audits on overhead to tech cost ratios?
Overwhelming 75% said no.
Yeah. This is one of the other largest places that I've seen issues. So obviously in a lot of companies, admin overhead directly impacts companies, but in the HVAC space, it dramatically impacts it. I watch time and time again overhead be extremely heavy compared to the tech cost. And that is a problem. It's really important to know when to add infrastructure. There are certain components of overhead that we have to have, and we know that. They're there. It's a cost of doing business. But you really want to continue to keep a regular finger on this pulse, so that when you add, when you get to a benchmark of say overhead, you should be able to add 5 techs before you have to adjust any more overhead expenses. And those are some of the things that we work on. That's one of the things I'm working with one of Jonathan's clients on now is overhead was really high for the number of revenue producers that were inside the company. And again, we all know you're going to have a building. You have to have certain staff members. There's going to be certain things you have to have in place to be doing business. And that's overhead. That's going to be your admin and overhead expenses. But there should be a place where you have a good, solid benchmark for the size of your business to be able to know, okay, I'm at a great place to where I should be able to scale to X before I'm having to add more overhead costs. And that's really important to keep looking at, because so often, again, bodies are thrown at problems. And hopefully, if you take nothing else from this, you take tech efficiency. Don't just throw another tech at it and hope that it works. Look at them, make sure you have the right number of techs for the calls, and do not create positions for people because the people are good, like personally good, not work good. Try to make sure that anything that you spend $1 on in your company cannot live without. That is very important. If you run your household, oftentimes, it's funny to me how many things, I look at and people are, we are in a convenient society, but overall, when you look at someone's house, they feel like that directly impacts them. And for some reason, business owners don't feel that same kind of pressure when it comes to their business. So they'll cut at home before they'll go into their own company and look at inefficiencies there. And so that's really important. I've had to say some pretty harsh things before, like, hey, you're taking money from your children and your wife every time that you decide to let them get away with this, or like make every time you have a non-performing staff member that you're paying money to. Those are some harsh comments, I know, but it is really true. It's really important that you keep an eye on overhead ratios as it relates to your revenue producers.
And look at it, and this is so near and dear to me because, like, we're in a weather-driven business, right? Like we're Mother Nature plays a big role in the success year to year in certain businesses. Like, and it doesn't have to play as big of a role, but a lot of the companies running their businesses through their bank account and living off of the checkbook is how they're managing things, and not really, looking at the future and how do we really get our numbers in aligned with the growth that we want. I'll say this comes down to what it's like marketing and ad spend. And it's like, okay, look, I could ask all of the clients that we have, would you take, well, not all, because there's some that have a $200 average service ticket and they're going to say no to this. But on average, if I said, we try to focus at Cornerstone on a book call, like a truck and driveway at $250 or less is what we're incentivizing our team on paid traffic. Well, if I ask my clients, like, would you buy a book service call from a new customer in your market for $250? They would say yes. But I will tell you, when you do the math on how many leads a client may need for the month based on what they want their revenue growth to be, that number freaks them out to spend $15,000, $20,000, $30,000 a month on ad spend to be able to produce that revenue. But then it comes down to, well, what if you don't produce that revenue? Like, now you've got the staff maybe in place. What if the revenue's not there? Right. But so there's a lot of unknowns, and that's where knowing your numbers, all your numbers, your marketing numbers, your conversion numbers, your dispatch numbers to conversion ratio, like all of your numbers help you make better decisions in your business. Right. So, like, if you don't know all of your numbers, then let's keep having this conversation. And I want to make sure that I'm bringing in the right experts to be able to help the Cornerstone family understand these numbers. So please, like, reach out to me, reach out to your client success specialist. If there's something you may not know, if it's not something myself or Angie can answer, I will bring somebody in that can get those answers for you, because I want each and every one of you to have success in your business. And running your business blindly, I'm telling you, is a scared feeling. Like, so I don't want any of you to feel that way. All right, so she's closing it out, it looks like.
No overhead. I mean, we talked about it. No, same thing. Just know when to add infrastructure and admin staff and when not to. That's very important. Your numbers should get to a place where they tell you that. And we briefly talked about that. This is a big one. Shoulder season planning. When we are all in a seasonal business, even some of us that are in areas where, there's always something going on. I cannot tell you how important it is to look at what happens, not only for yourself, but for your staff. I mean, my husband has been in the HVAC world for 23 years. There's nothing more frustrating, when he was a tech, then the fact that he would work 80 hours during the summer, and then the summer would end, and then it was like he wasn't allowed to get another job, but then he wanted to be on call all the time, but he would only get 10 hours of work. So how can we plan as a business for us to be successful as owners and for our team to be just as taken care of? Because one of the other sides, aside from financials, one of the other biggest issues is I think we can all know that in the HVAC world, it is so hard to find trusted techs that are really good at what they do. That to me has been really hard on a lot of businesses outside of the HVAC world. And that one has been hard. So for me as an owner, not as a CFO, as an owner, I want to be able to do everything I can planning for my company to make sure that I protect those people when we go into shoulder season. And then from a CFO side, that is really important to me as well, because if I protect them, I'm rolling right back into big season with my top producers, and I'm able to actually do that. And the way that you're going to keep that and the culture in your company and everything is going to be good is if you really take it seriously as an owner and do your due diligence. It is our responsibility to plan and make sure that we're protecting our business through those shoulder seasons. And numbers can help you do that. There are a lot of ways that you can do that. There's strategies that you can do to help with that as well. But if you don't know your numbers, there's nothing that you can do really. Oh. And again, I'll just say it again. We've talked about it. We've kind of beat it to death on the overhead side, but overhead out of control, overhead will kill your company because it's just a simple equation. Overhead is not producing revenue. If it's higher than your revenue producers, you're expending more than you're bringing in. It's as simple as that. You're going to be in the red every time. So that's really important. Another thing before I kind of close out will be commercial versus residential. I know that a lot of people do both. But just wanted to kind of brief for those who do, or those that don't, and maybe have always thought about what does that look like. One of the number one reasons for our company that we have always done commercial and residential is because commercial, the way I look at it from a finance side, is it's capital versus longevity when it comes to finance. So commercial is going to be your net 30s, your net 60s. You're going to have much larger chunk invoice amounts. So you're going to bring in a much higher revenue. Depending on if it's new construction or service, your margins may be different, but you're definitely going to bring in more, but you have to play the long game for commercial. So residential is it's what I consider the capital arm of the company. So residential, for the most part, is COD. So when you are doing, COD, you're getting cash right then. That is your cash flow for your company. While, if you think about it from, $500 at a time. So you're running your $500 and they're coming in all the time. But then you have that really big commercial side, right? So that's a $50,000, $60,000 job. It may take you 60 days to get that, but then all of a sudden there's this influx of cash. But your residential has held you through from a cash perspective through all of those big commercial turnovers. So that's a good way if you're thinking of it. A lot of people don't want to get into it, but just wanted to put a little plug in there from a finance side. That's one of those kind of reasons why it can be good. It diversifies your revenue streams and it allows for your cash flow to be more spread out. So that's just kind of one plug in there for that. Last but not least, we've touched on it the entire webinar. I can't stress enough, plan, document, and track. Like whether it's EOS, whether it's through a third party in-house consultant, however you want to do it. If you are not planning out your numbers and documenting them so that you can actually see the changes, or you can see what's failing and what's really succeeding, then you cannot run your business well. And it may seem like it's going great right now, but if it's going that good right now and then you implement these changes, imagine what you could do to your company. Imagine how big it could be. And so this is huge. I implemented EOS in a company, and we went 6 million to 58 million in 3 years. It was a huge change. Obviously one of the number one reasons is we were tracking exactly where things were failing. And then the second biggest reason is right people, right seat. That forced us to really look at, who are we throwing money at that does not bring value to the company? And so it did cause a lot of efficiencies. Revenue did go up, but our net actually increased because we were really efficient with every dollar that we brought into the company. And that is probably one of the largest things to stress is, you can bring $1 in, but if you spend $1.05 to do it, it does you no good. So make sure for every dollar you're bringing in, you're at least pocketing 38 to 50 cents on that dollar.
So guys, if you have any questions, I'm going to kind of go through the closeout here and kind of let you know how you can reach Angela. But if you have any questions, drop it into the Q&A section now. I will tell you, this is Angie's company, Alco Management Group, and I just dropped her email address into the chat. Now, her company offers bookkeeping and accounting services. Obviously, if any of you guys need help there, feel free to reach out to her. That's kind of at a unlimited capacity. Like, she can, take that on, and she's got her team that can help you. The big bulk of what we were talking about today, and wanting to really drive home the numbers and for these owners of how to take your business to that next level, is really on the planning, knowing your numbers and the planning. And that's what she does in her CFO capacity. So she's a fractional CFO, but she's one person, and she's actually like a little person, right? So there's not enough for her to go around to, so she has 2 or 3 spots open right now that she is going to take on Cornerstone's clients. So if there's any questions you have for her, that you may want to potentially work with her, or have her come out and do an on-site or a deep dive to see, sometimes she works at a consultative level. So it's like sometimes you don't know how much you need her or don't need her until she's in your business and can kind of see the structure you have in place, the culture you have in place. So she'll take a look at all that for you. But please, shoot her an email, reach out to me, whatever you need to do. I can tell you that she works in Cornerstone's capacity, and the other companies that I own or am affiliated with, she has 100% has her hands involved in them. And then several of Cornerstone's clients right now, and the impact that we're seeing when you understand your numbers, because I can tell you, all of my clients know. They know how much revenue they made last year. Well, let me tell you who told them that. Like, their CPA told them that. Then they know how much I want to do. I did 5 million. I want to do 8. Like, they don't have a clue, though, how they're going to get to the 8 million. They don't know how many installers they need. They don't know how many trucks they need. They don't know how many technicians they need. They don't know if they need more office staff. And those are the scary things. But what they do know is revenue. I want to do new $1 million in acquired business. And it's like, great. When I tell them how much I think that's going to take in marketing, they completely freak out. But it's not just marketing. It's like, there's a lot of other pieces there. Can you afford it? Does it make sense to look at a $3 million growth? There's just a lot to take in. And I'm telling you, having somebody like Angie and her team on staff that can help you plug in those numbers and help you have that dashboard to see, is my team working at the efficiency rate that I want them to work at? do I have the right bodies in the right seats? Like at what place do I need to, hire and fire? She can make a huge impact there. So if you've got any questions, feel free to email her directly. Angie, anything you want to close out on? Maybe something that, that you can leave these people with today that they could implement in their business today that would make a huge impact.
Probably the first thing that I would say to do, fairly immediately is go to your system, whatever system that you're looking at, Service Titan, Service Fusion, there's a lot out there, but those are the two top that I work with. Look at it, see these things that we talked about today. Am I tracking them? Anything that I said when I said, are you doing shop time versus, drive time? How is that implemented in your company? Do you have a policy or a training that actually onboards your techs right? And they know to do that. Look through those. The first place is always to look at, what you're tracking currently. I always say garbage in is garbage out, meaning that, if it does us no good to look at data if we're not utilizing it correctly or we're not consistently, entering it. So that would be the first place I would go. And then, start looking at how are my policies and procedures? What am I doing that drives some of my numbers, and do I only focus on revenue? Because if you do, and you're not looking at the other side of the business, then, you'll just continue, your profitability will never adjust. You'll just continue to grow revenue, but your expenses will be right there with it, if not more. So just really think through that, think about planning. That's just really important. It's hard to grow a company. And we all know in this day and age, we're coming into a colder season. It's a great time to really stop and think and put some plans in place before your next season, and really look at, how you did or how you are doing through this summer right now.
Yeah. And, guys, really pay attention to what she just said. The garbage in, garbage out data is single-handedly one of the biggest, pieces of your business that can help take you to that next level. Revenue's great, but if you don't have the data to be able to show what was my expenses and did I actually, what were my margins on that data? But that doesn't just come out of thin air, right? You have to make sure that your staff is properly entering this information. So a lot of people I know are using Service Titan because they Service Titan's done an amazing job at branding their company. But I will tell you that Service Titan is worth nothing if your team is not properly putting the information, if they're not tagging the right tags on every single one of those calls, because how do you make projections and forecasts if you don't have the right data? So I don't care if you're using House Call Pro or Service Titan or Sarah, it doesn't matter. If you're not properly training your team to put in the right information, it's useless. So that has to be step one. So Angie, thank you so much for your time. And, guys, I hope if you have more questions for her, please do not hesitate to reach out to her. We are here to help you. And we want to thank you all for being, clients and being part of the Cornerstone family. So thank you so much, Angie. I appreciate it. And hope you have a great weekend. We'll talk to you soon.
All right. Bye.
All right. Bye, guys.